Welcome back. It's Michael and Rick here again. It's been a minute since we recorded, but today we are talking purses. Two dudes talking purses. So, why that's funny is because we have and have owned a brand called Hermes, not Hermes or anything else. It's Hermes. You've probably seen it in your portfolios if you invest with us. It is a French, largely family owned, like 60%, I think, still family
Almost
owned.
70%. Yeah.
Um, high end fashion brand. You may have heard the term Birkin bag, which is a purse that I will probably never buy. You take our advice, you probably wouldn't buy it either, but maybe we can afford one if we invest you right. These purses are, 15, 20, $25,000 purses. Not only that, you can't get them unless you're like somebody in the world of fashion. So, they interesting backstory. Hermes, the late actress Jane Birkin sketched out the design for the first Birkin bag with the current CEO.
Well,
John,
his uncle.
yeah, at the time, she's passed, but at the time, John Louis, he and her sketched it out on a plane from somewhere to somewhere, but they
yeah.
basically didn't take off or anything until I think the Great Recession is when they started getting pretty popular. And you think, why on earth is a $25,000 bag getting popular in 2008 when we had the global recession?
Yeah.
Right?
I mean, they've been around for a couple hundred years, so this is not
It's just the Birkin is
overnight
specifically.
success.
Though,
Yeah,
so.
it's definitely gained in popularity.
Yeah.
Kelly bag. Grace Kelly was famous for carrying that bag. And it's a Veblen good, which is an interesting niche of economics if you want to look at it that way. In the sense that the higher the price, the greater the demand. It's one of the rare goods that falls into that category.
No.
Which interestingly does make it a little bit recession proof because the people that are spending $80,000 to be able to get access to buy a Birkin bag, they're you know pretty recession proof. They're not.
I mean, you have to like literally put your name on a list, and they have to approve you to get it. And then the minute you get it, you can flip it for 2, 3 times what you even bought it for, if it's not the color you wanted or whatever. But I mean, you're talking, people have to get approved to buy these things at the Birkin level, and that's not the only thing Hermes sells. But typically speaking, you'd have to spend, $25,000 in scarves to
Yeah.
even be able to get like taken seriously on the list. So it's pretty wild stuff. The economics around Hermes and Birkin are wild. It's almost like that echelon of people, like Mike just said. It's like, hey, I'm not affected because I'm so high above what would be affected, and I want to prove it. So you don't necessarily think luxury goods are going to be recession proof, but in the case of Hermes, it's seems to be, especially since the Birkin bag specifically took off in 2008 because of that.
Yeah, and in the past we've highlighted different investments that we've held for more financial reasons, and we certainly hold this particular stock because we like their financials. Huge cash flow generator, free cash flow generator. Company's got a pristine balance sheet. In fact, on their press releases, when they announce the results, they focus on free cash flow generation and net cash on the balance sheet, which is two factors that, financially speaking, that we find highly desirable. And so when we're trying to look for an investment, we want to figure out what free cash flow they're going to generate in the future. Just count that back to a price today. You can add the net cash on the balance sheet to determine what you think the company's worth. But for Hermes, one of the interesting things is the way that they're able to drive value, and in my view, over the long term, what will help them sustain the ability to drive value for our clients is why we're invested in the company. Is more on the qualitative side. So they have this Veblen product, takes very low levels of research, development, marketing. They don't pay famous people. You'll never see an Hermes, ad with somebody famous that's carrying their products. And so that keeps their costs down. Scarcity is actually, kind of a good thing for them. So they're looking to grow their production capabilities by about 7% a year moving forward. So, there will be growth there, but also their pricing power is tremendous to, keep things from the top line standpoint growing at a rate equal to or greater than inflation. In the markets that they're selling products in is expanding as well. So Asia Pacific, which they'll break it out geographically, represents today about 30% of their market, and so that's the most rapidly expanding part of their market in the in the world. But what I find most interesting about Hermes is the ownership structure, because as you alluded to, there's 70% of the stock is actually closely held by the Hermes family and subsequent generations. And so they had a issue that came up around 2010, I think it was. Bernard Arnault. These French, yeah, too much French for me. I never studied that in high school. I did more Spanish. But head of LVMH, richest man in Europe, actually tried to acquire Hermes, failed because the family bonded together and wouldn't sell shares, and they actually created an arrangement that would protect their ownership from takeover. Cemented that in 2022 to the point where it's about a 60 family office where they agreed, okay, if someone's going to sell, we get first right of refusal to buy the shares. So that results in an ownership structure where they're operated, the way that I would run a business if it was mine. This is our family business. We're
family owned but public.
Protect the brand. I think the risk for a company like this would be to see them either increase production to a point where it was no longer a Vevlin good. It wasn't something that was special, or the quality of the product was diminished. It takes about 25 hours to make one of these bags from start to finish. So it's a pretty labor intensive process. So, if something like that were to happen, then that could, ultimately decrease the value of the brand. The ownership structure, I think, protects from that to a certain extent, because they're not as worried about quarter to quarter results from, what shareholders are going to do, how they're going to react. And so, I think one of my favorite things I ever heard Warren Buffett say is that if you can buy an investment, the market closed for 10 years and you wouldn't lose any sleep over, what was going to happen in the marketplace as a result of owning that investment. That's kind of one of the attributes that he looks for. This falls in that category for me. The market closed down for 10 years. I think Hermes is going to be just fine. I'm not worried about, the quarter to quarter fluctuations in this business. And for that, I think it's an exciting long-term investment.
So if you see it in your portfolio, it's Hermes, not Hermes. It's in France. It is one of our, I don't know, it's our mid-tier holdings. It's not our biggest holding. It's not our smallest holding, but
it's the 10th largest holding.
Yeah, so right in the middle.
It's in the top 10.
Yeah. That's Hermes in a nutshell. Thanks for hanging out with us. We will talk to you soon. Thanks. Hey guys, if you like that, click here or here to see other videos that we've recorded, and we'll see you soon.